Hello friends, welcome to my channel Stock Market Investment. If you are visiting first time, please subscribe and hit the bell icon. And for regular updates and notification, please do like and share to keep me motivated for more upcoming videos. This video is only for education purpose and don't consider this a stock recommendation. So let's start the video. So in today's video, we are going to discuss a stock from FMCG sector. And we all know that Indian economy is expected to grow and the possible forecast for FMCG sector. If you really want to look more into these details, please look into the description box where we have provided the link for the overview of FMCG videos. So I would like to share one of the news which relates to FMCG sector. So for 2022, India is predicted to have around 214 million hyperlocal e-commerce shoppers. And out of which, if you see, almost 48% of all e-commerce users in India is accounted by this hyperlocal commerce. We have Zomato as the most popular hyperlocal app, followed by some very well-known names: Swiggy, Amazon, Big Basket, 1MG, Grofers, Uber Connect. And not only this, I think there are popular hyperlocal services, like if you see a local food delivery, followed by local logistics, groceries, vegetables. So there is a very high potential for the growth of these hyperlocal utility services. And this is due to various factors, like we are seeing a rising disposable income, bigger working population, and it's a greater desire for inconvenience. Going to review today is India's one of most diversified contract manufacturer. If you see, they have almost 25 plants. They have 30 plus years of experience with 12 million plus lives touched every day. That means their products are used by almost 12 million plus people every day. That's a really big thing. And they have a team of almost 2,400 people supporting this company across India. Not only this, if you see, they have their products into multiple segments. They are into food and beverages, home care products, beauty and personal care, healthcare and wellness, leather and sports footwear, and even in pest control. So they have a very well diverse product segment. Now let's also look into one of their key customers and what brand this company caters to. Look, company's list of partners, or maybe the firms for which they work as their contract manufacturer. You have a look into the brands which they offer: Wipro, PepsiCo, Lakme, Penguins Farms, RBL, Amazon, Hindustan Unilever, Arvind Fashion, Jidus Wellness, ITC, Imami, Bata, Racket, Tata Consumer Products, even Marico, Godrej, GSK, Himalaya. So there is an endless list to explore. So that clearly shows that this company has a partnership with very well reputed brands, which brings an utmost comfort or confidence into the brand. So as we have already seen the company's product segment, now let's look into the brands which they manufacture. So if you see here, they are into most of the leading brands which touches our life from day-to-day aspect. Brands like Power, Nykaa, Harpic, Red Label, Taj Mahal, Brew, Sunsilk, Clinic Plus, Santur, Shower to Shower, Nor, Paperboat, Hush Puppies, Arrow, US Polo, Rin, Surf Excel, Wheel, Comfort, Dettol, Lysol, Martin, Mothercare, Lakme. So you see here, we are almost familiar with most of the brands which this company manufactures. And being an FMCG sector, I think with the Indian population, these are very well-known brands, which we are not going to stop from tomorrow. So the scope for this company to have more reputed firms partnership and even enhance their list of brands is expected in future. Now let's look into this company's market cap. As you can see, it's just 4,000 crore. What it means that this company falls into the category of small cap. So small cap stocks are very risky stocks. So there is certainly a risk involved with this stock. And as we say that in stock market, if you want to make big returns, it comes with bigger risk. If one is not willing to take more risk, then they must stay away from the stock, as they fall in high risk and high reward category. So these stocks can fall 40%, 50% at times. So we have to be very patient and you really need to back your decision for your investment. If you see the current price is 1789 as and when recording the video. The company does not provide any dividend, which is fine because I think the most of the money or the profits which company has should be utilized in the growth rather than giving it back to the investors. So that's not a bad thing. And if you look into the shareholding pattern for this stock, I think promoters holding is somewhere around 61.87, which has increased in March 2022. So that clearly shows that promoter is having good confidence and trust in the company, which is very important for any firm. If promoters are not having confidence, then definitely me and you having these stocks will not have much difference. And if you look into foreign institutions and domestic institutions, as it's a small cap, so their share may just uh, be on a zigzag pattern. So they'll be buying and selling multiple times. So even if their shares is almost zero, it doesn't mean that the stock is bad. And if they have heavily invested, it definitely means that the stock is going in the right track. So if you see, even they have 6% as of 2022. So foreign institution shares we can see has fallen. So it's in cycle which may go up and down. And domestic institutions share has also decreased. If you see from, so initially they had some buying at max to 7.56% of holding, and now gradually it has come down to 6.53. And our retail investor shares, if you see, has gradually from 2019, from 23, it has fallen down to 22.5. So where the share has gone, this has gone to either promoters, FIIs, or DIIs. So the shareholding pattern looks good. We have a very good mix of promoters, foreign institutions, domestic institution, and retail investors contribution into this company stock. Now friends, for any firm, it is very important to look into the reserves and borrowings before we make investment. Because if there are any problems in that can be clearly identified looking into the reserves and borrowing. For example, if the borrowings are constantly going high, the reserves are declining, the sales are going down, then it clearly shows that there is a big mess up and we should stay away from that stock. As we all know, if the borrowings are not utilized in a correct way, then what happens to the firm? A classic example, I think you guys might be aware, for Anil Ambani firms, where the money was borrowed for Firm X and it was later moved into different directions. So borrowing is not a bad thing, but yes, we may have to make sure that if the company is borrowing for purpose X, it should get utilized in purpose X only. So if you see the reserves, I think the company reserves have been growing since 2019 because it's a fairly new firm. So we have matrices for almost last 3.5 years. And if you see the borrowings have been increasing, which is not a bad sign because for any small cap firm, they need some capital to invest into the firm so that they can grow their firm into much larger scale. So I think being a small cap firm, you will always find small cap firms having a higher borrowing list rather than compared to large cap, because large cap firms will always have surplus amount. But these are small cap firms. They need funds to grow. So having that borrowings is not bad. And if you see, there are 351 crores of borrowing as of March 2020, and reserves are somewhere around 282. So it's roughly a gap of 70 crores, which is not a very big issue for even a small cap firm. So looking at reserves and borrowing, I think we can say there is nothing alarming or something which a retail investor should be worried about. Now friends, let's look into the sales and profit figures for this firm. So as there has been less than 5 years of listing for this firm, so we have the numbers from June 2019 to March 2022. So let's see quarter on quarter how this company has done. So if you look into the sales figure, in June 2019, they had a sales of 145 crores. In quarter September 2019, 172 crores. Next quarter, December 2019, they moved to 2007. So if you see quarter on quarter, their sales has been doing well. Yes, 2020, you see a dip, which is 202 crores, which is majorly because of COVID. We all know most of the companies were hit on the sales front. 2020, September, again, it shoot up when things started improving. And if you see from there on, it has been on an uptrend. So it has moved to 581 crores. So almost their sales have grown by more than 300% if you see. If you compare from June 2019 quarter to March 2022. And let's look into the net profit because their expenses are the key factor for any firm. So if you're not able to control your expenses, then that is going to badly hurt you in terms of a profit. The interest component is also there. I think if your borrowings are very high, that definitely, makes it further difficult. It eats up your net sales and revenue. So let's look into the profit, like how their expenses and interest have impacted, and the tax component is definitely there into the net profit. So net profit, if you see, I think it's in June 2019 it is 4 crore, and it has shoot up to March 2022 in 12 crore. So you can see it's a small profit which they have made, being a 4,000 crore market capitalization firm. We don't expect this firm to make 1,000 or 2,000 crores of profit, because they're miles behind those large cap funds which makes or generate these kinds of sales and profit. So this is expected from a small cap firm with 4,000 market capitalization to have these kind of numbers, which is okay. And net profit also, if you see quarter on quarter, I think it is moving up. I think definitely it went down 2020, and it has done really well till March 2021. And after that, I think in June 2020 it has a dip, and from December 2021 to March quarter, I think it is almost kind of a constant. But still, the figures are very good, because if you see even the net profit from 2019 June quarter to March 2022, it has almost increased 300%. So it is almost 3.5 years into the listing, and this is a very good return if you see in terms of the net profit. And the same can be noticed in the EPS, which was 3.22 in June 2019 and shoot up to 5.43 in March 2022. So friends, just imagine that if you hold this firm with market fluctuations of up and down, shares going down by 20%, 40%, 50%, and if you are firm with the fundamentals, I think by the time you retire, you may have to just sit and relax and enjoy the earnings, because this one firm can give you a return maybe in crores, which with maybe a small capital invested today in 15, 20 years, nobody knows like what kind of return one can generate. So, but the potential is very high. So please keep this stock into your radar, into your watch list. Now friends, quickly look into the returns this firm has generated so far. So if you look into one-day return, it's as of 16 June 2022, I think it's 2.87 negative return, which has fallen. I think 5 days return, if you look, it's minus 5.95%. 1 month return, minus 4%. 6 month, minus 9.74%. Year into same 1 year, it's almost minus 17.16%. So one can really argue that even FD can give better returns than this. What is the point in investing in the stock? So friend, you have to understand that if you are into stock market, for making big returns, you have to be invested for minimum 5 to 7 years horizon. If you're looking to make a quick fortune in 1 month, 2 months, or 6 months of time, then you should better stay away from stock market, because that is not going to happen in reality. The problem is retail investors are always impatient, and we want money in just 1 month, 2 months, 3 months of time. This will not happen, friends. If you're really looking for any shares to make a killing, you have to be invested for long term. This is all about long-term investing. And if you see about the stock as well, this has into multiple falls. See, 14% here, almost, if you see 16% here, if you just have a look, 22% here, almost 13% here. So this stock has gone into multiple falls, and then it has shoot up. So if you're really not patient enough, and you really don't look into a bigger time horizon, what will happen? You will end up selling the stock over here or somewhere here. Oh, the stock has fallen 15%, sell it off. Oh, the stock has fallen 22%, let's sell it off. But for those who have really invested in this period, if you see for 1 year, they haven't sold it off. Look what has happened. 5 years return is almost 340%, which you're not going to get from FD. So this is the whole point of investing. And this is not even 5 years. If you see, it's almost 3.5 years, less than 3.5 years, the stock, since it has been listed. So if you have sold here, here, or here, I think, and then the same retail investors will come here. If the stock is going up, let's buy on here, here, here. So one thing is very important before you're making investment. If you know the company's fundamentals are fine, please review the quarterly results. And if everything is fine, stay invested. Stocks may fall and down, but company business will still continue to grow. And that is more important. So which stock we are talking about? This is none other than, I think if some of the folks have guessed it, it is Hindustan Foods Limited. Hindustan Food Limited, if you see, max horizon will be still same, because it is not even 5 years into the listing, has given 340% of return. And the market cap, if you look, it's so less. It's just about 4,000 crores market cap. So the company has enormous potential to grow. It can go into a mid cap and then maybe someday large cap. So this is one of the multi-bagger stock. I think if you invest now, you can make a fortune. But this is not a stock buying recommendation. You should keep it under your watch list, study, and if you are convinced with the company's business, then you can go ahead and make investment. Thanks for watching the video, and if you have learned something new today, then please subscribe, like, and share. Bye bye and take care till we meet up in our next video.